Wealth Money Management Show, the show tailored towards you, the individual investor, of which there are so many. Our goal is to provide you with plans and options to help you take greater control of your financial destiny. I'm Mark Todd from the NAB, and I'm joined by David Lane from Pitcher Partners in the Brisbane studio and Nick Yaxley from Bond Advisor in the Melbourne studio. Now, look, let's try and get an idea. I want to understand the markets have been really volatile. And I think a lot of people haven't constructed a portfolio that deals with volatility, because I think there's a link between, or there's a misunderstanding between risk and volatility. Because if the market, the herd wants to sell, the risk becomes completely different. So David, how do you manage volatility in a portfolio on behalf of the customers? And it's not about you, it's about how do you explain it to them?
Yes, certainly, Mark. And I think what you say is absolutely right, that you need to have liquidity so that you don't have to make a decision as to when to sell. And that's part of the way that we manage volatility, by having a reasonable cash balance in client portfolios, so that as they come to the end of the financial year, for example, if they need to draw a pension, there's enough cash within the portfolio to do that without drawing down on the assets at the wrong time.
So is it a little bit, is it just to butt in, and sorry to do that, because we've got a slide that you provide, a really great slide, and it's about how to construct this portfolio and what it means to construct it, how the performance has been. So does that lead into that volatility story? And I think the guys will be able to bring it up now. The strategic asset allocation difference. Do you want to walk through that in terms of the volatility? That, do people get much more anxious because markets are moving around as opposed to the performance you're getting down here?
Yes, certainly that's correct. And as that slide says, the strategic asset allocation, which is putting the assets in the right mix at the right times, accounts for most of your returns. That provides you with the ability over a longer term time frame to ride out the volatile markets and have the opportunity to take advantage of tactical opportunities as they arise. Too much time, I think, is spent on timing and stock selection, and not enough time on making sure that the assets are in the right mix for your own individual risk profile. And that's very important as well, because obviously investors all have individual risk profiles and different return aspirations as well. So it's important to take those things into account also.
So let's just stay with you, David, about that one question, which I think is really interesting, is around that idea that client can clarify their own risk. Now, if I'm not in markets, I've worked all my life as a plumber, and I come in and I say, look, I don't want to take any risk. I just want to buy, the four bigs. I want to buy Telstra, and of course, over the course of this year, they probably would have lost 20% of their revenues. How do clients understand, or how do you get them to understand their own risk tolerance?
Yeah, it's a difficult one. We as advisors have a lot of tools that help us do that, in terms of questionnaires that we can go through. But really, it's important to sit down and work through your understanding of risk, because risk is unique to every individual.
Oh, yeah.
My view of risk in the share market is different to somebody who hasn't been invested in the share market in the past. So it's really a matter of education, understanding what you're comfortable with, and using the age-old sleep at night test.
Yes, that's right. Well, Nick, I mean, you never sleep because you work so hard.
Yeah.
But Nick, the same for you. I mean, when you brought in a great chart. When you ask clients to understand their risk tolerance or how they classify themselves, you do. What's the plan when you start looking to create a portfolio? Do you talk to them about their own risk tolerance, or do you look at it slightly differently? And I think we've got your chart that we're going to try and bring that up.
Yeah, broadly speaking, your volatility will also be a function of your objective, right? So what we do is we manage a number of model portfolios based on objectives, and that will in turn correlate with a particular individual's requirements, investment requirements. Whether or not that's suitable for them is up to them. But we effectively, if the chart's up, you'll be able to see that we sort of have a multi-step process whereby we're looking at a vast universe of stocks or securities, and we dwindle that right down to a basket of, say, 10 to 12, which, we've got to think that this is only the fixed income component of your overall portfolio. So that we would say then of a more balanced portfolio, that would probably be more diverse than what we were suggesting earlier. So, this is an important function of what we do, and, there's a very, very complex process which goes into it. So you have to look at multi-facets to, effectively achieve that objective that you were trying to do.
So Nick, is it more about people trying to get to grips with the filters? So the filter might be, as an example, do I know anything about the industry? And if it goes to a no, then there straight away that's out.
Yeah.
Am I prepared to learn about the industry? Is it about characterising some of the filters you as an individual? Just bearing in mind that the people here will like to try and create their own filters around what might make the appropriate assets for them. Is it more about creating those filters that says, okay, now I've got 10 I want to talk to, I can go and get advice, or I can go and model them and put them into a portfolio and see how they perform? Is it about having the best filter that best suits you?
Yeah, absolutely, and that's what we at Bond Advisor try to provide to our clients in our service. So you can log in and you can filter out by industry, you can filter out by different parts of the capital structure, by different parts in the yield curve, by all kinds of different ways you can slice and dice the data, because that's ultimately a very, very important part to achieve.
Yeah.
Dave, have a few minutes, and you brought a compound slide, and I think a slide on compound investing. And I think there's a question that I always ask clients. Rates have stayed low for an awfully long time. They don't look like they're moving up. Do you think investors have too short a horizon in terms of their investment horizon?
I think it's certainly very easy to do that, and particularly with the noise and the white noise that you mentioned that's around us constantly nowadays. But the chart shows that investing over a long period of time, whether it's in Australian shares, whether it's in property, whether it's in international shares, or whether it's in bonds, you're going to get a good long-term return. Over the last 30 years, each of the main asset classes have averaged around 10% per annum returns.
Yeah.
So putting those asset classes together in the right mix allows you not only to get those long-term returns, but also allows you to have the ability to generate the ability to change the asset classes as markets allow.
So if I could summarise both of you, it seems to be, take a bit of time, get the right filters, invest for longer horizons, but make sure you think about how to build out your portfolio that suits you. So have a really strong idea on why you're building out the portfolio construction in the way you're doing. Would that be the best way to sum up? And I'll start with you, David. Is that the way it should be looked at?
Yeah, that's exactly right. Oh, absolutely.
And Nick, have I basically got what you were trying to suggest?
Yeah, look, the primary thing for me is have an objective and keep your objective very simple and manage your risk accordingly.
Okay, you've got 10 seconds each. Here's my next question. How much time should investors spend, David, on doing what I just described? Those three major points.
Yeah, be disciplined about it. We, by design, have a quarterly process where we look at portfolios quarterly, and we've found over a period of time that that's an adequate time to look at your portfolio. You don't need to be looking at it daily.
Right, and Nick, what do you think? Is it quarterly, monthly? How often should you look at this and reassess construction, goals?
Depending on if you're in a growth stage or in a pension phase, you should be looking at it as frequently as you can, just to ensure that you're keeping up to date, because markets change every day.
You're not telling me to look at it every day, are you? I've got a job.
Not every day. No,
okay.
That's right, mate.
Nick, get off the fence. Once a month, once a quarter, how often?
Yeah, I'd say once a month.
Thank you, mate. Look, a very big thank you to my friends that have come on the show. Nick Yaxley from Bond Advisor, David Lane from Pitcher Partners up there in Brisbane and in Victoria. It's been fantastic. I want to thank all the viewers for watching. I hope you have a great Thursday night. I'm Mark Todd from the NAB. Enjoy.
Want to see something that could have the power to help you finally achieve your financial dreams?
This is Trade Time, LTG Gold Rock's exclusive smartphone app, which is a revolutionary new way to invest. It's so simple. All you have to do is follow our trades. You just pick which of our trades you want to take, choose your level of risk, and you're set.
Are your investments meeting your goals and needs?
Jump onto dailytrade.com.au right now. Register for more information about the Trade Time app, and we'll even give you a free copy of my ebook, The 7-Minute Workday.
Save every day at Coles.
Quench your thirst with our everyday prices on all your beverages. Fantastically fizzy Coles brand soft drinks, just 75 cents a bottle every day. And Coles brand natural mineral water, also just 75 cents a bottle. There's 2-litre Coles brand juice, down to just $2 every day. Or for the perfect cuppa, 100 pack of Lipton tea bags, just $3.50.
Want to see something that could have the power to help you finally achieve your financial dreams?
This is Trade Time, LTG Gold Rock's exclusive smartphone app, which is a revolutionary